Welcome, everybody. We're so excited to have you here at our webinar, sharing the latest update of the Chinese Loans to Africa database and discussing lending in the pandemic era. My name is Cecilia Springer. I'm the Assistant Director of the Global China Initiative at the Boston University Global Development Policy Center. For those of you who are joining us for the first time, the GDP Center is a policy-oriented research center working to advance financial stability, human well-being, and environmental sustainability. For those of you who have joined our events and webinars before, welcome back. Today's webinar will be covering the latest update of our Chinese Loans to Africa database, one of the 5 databases that we maintain as part of our Data Analysis for Transparency and Accountability, or DATA, research group. As you will see, the Chinese Loans to Africa database covers an incredible range of sectors, financing types, and years going all the way back to 2000. I also think it's important to mention that behind the development, maintenance, and update of this database is a tremendous amount of human power, starting from the work of Deborah Brodegum and the Johns Hopkins SAIS China Africa Research Initiative, or SAIS-CARI, and her team of researchers, through the work of our fellow Jizhong Huang and her team of research assistants that have been updating the database this year. So in addition to discussing the latest update and our new interactive, we will also have a distinguished lineup of speakers who will help add crucial context to this data and interpret it in light of recent trends. So in order for our panelists, we will have Yike Fu, who is the China-Africa Policy Analyst at Development Reimagined, and she's joining us from Hangzhou, China. Dr. Piwo Minyando, a lecturer in African Studies at Howard University, who is joining us from Washington, DC. And lastly, Dr. Magali Masamba, who is joining us from Pretoria, who is a joint postdoctoral fellow with us at the GDP Center and the Center for Human Rights at the University of Pretoria. So panelists, please keep your remarks to 5 to 7 minutes each so that we can have time for discussion, as well as a Q&A from the audience. So first, I will start by giving the floor to Tarella Moses, who is the data analyst and database manager for the Global China Initiative at the Global Development Policy Center. And she'll share some more about the data results and some of the exciting updates from the past year of work. Tarella, over to you.
Thank you, Cecilia. I'm going to first just pull up my presentation here, so I hope everyone can see it soon. Just give me one moment. Okay, great. So my name is Onyi Tarella Do Moses. Feel free to call me Tarella, and I'm the data analyst and database manager for the Global China Initiative. Today, I'll be walking you through our Chinese Loans to Africa database findings. Just to give you an overview of the database, it is an interactive data project that tracks loan commitments from Chinese policy and commercial banks, government entities, companies, and other financiers to African governments and their state-owned enterprises. The database uses publicly available data from official government documents, contractor websites, fieldwork, interviews, and media sources. We call our methodology manual forensic internet sleuthing. Every year we cross-check and review old data to confirm the status of existing loans. And for new loans, we research information for these loans by using media sources as our investigative leads. And then we review host country and Chinese official sources for new loans specifically. And then we ensure that all these sources confirm one another to ensure that the data is accurate. This is a simplified version of our methodology, but feel free to take a look at the methodology in more detail, which I'll show you on our data interactive later. So I just want to take a step back and give you insight into Chinese Loans to Africa in 2020. Everything that I'll share here is in our policy brief that we just released. In 2020, we found that African governments and Chinese financiers signed $1.9 billion worth of loan commitments. This is a 77% decline from 2019, where African governments and Chinese lenders signed $8.2 billion worth of loan commitments. This 2020 $1.9 billion covers 11 loan agreements to 8 countries and 1 regional bank for 4 sectors. If you look back and just take a step back and look at the lenders that signed these loan commitments in 2020, you will see that the Export-Import Bank of China signed 8 of the 11 loan agreements. ICBC and Bank of China, 2 commercial banks, signed the other 2, and then Dongfang Electric, which is a Chinese company, signed another. If you look at African borrowers across the continent, you will see that many of them are in sub-Saharan Africa. So in 2020, Burkina Faso, Ghana, Democratic Republic of Congo, Lesotho, Mozambique, Madagascar, Rwanda, Uganda, and the African Export-Import Bank were African borrowers for these loan commitments. Loan commitments, again, were for 4 different sectors: the transport, power, ICT, and banking sector. In the past, the transport and power sector have received the 2 highest, largest aggregate loan amounts. However, in 2020, the ICT sector received the 2nd largest aggregate loan amount at 568 million for 5 projects across 5 countries. So it's noticeable that 2020 numbers are low, and we went through several factors to kind of think through what could account for such low amounts in 2020. So we could not ignore the effects of COVID-19 and how they may have impacted African willingness to borrow from China specifically, as African governments were really focused inward to make sure that they were supporting their domestic economies that were affected by the pandemic. And then we also saw some debt levels rise, specifically, or African countries reach some level of debt distress, which may have also impacted Chinese lender perceptions of financial risk on the continent, which, coupled with the cautionary lendings that we've seen in the past few years, may have caused Chinese lenders to potentially pull back from lending in 2020. We also saw that China kind of turn more inward in terms of their economic growth policies, where they established the macroeconomic dual circulation theory, which generally has their economic growth be dependent on domestic supply and demand, while giving enough room for access to international markets. Despite such low numbers, when we look into Chinese loans to Africa from 2000 to 2020, we do see some significant figures. So Chinese financiers signed 1,188 loan commitments worth 160 billion with African governments and their state-owned enterprises between 2000 and 2020. When you look at the spread across the years, you do see a peak in loan commitments in 2016. However, when you take out the special case of Angola, which received a lot of refinancing commitments in 2016, you do see that the peak for the rest of Africa is 2013, and there's a general decline that follows after 2013. The top African borrowers are quite diverse across Africa, and we do see that these top 10 African borrowers received 71% of the aggregate loan commitments from 2000 to 2020. Angola, Ethiopia, Zambia, Kenya, Egypt, Nigeria, Cameroon, South Africa, Republic of Congo, and Ghana account for those top 10 borrowers. When we look into lenders who have signed these loan commitments, we also see a diversity of lenders. However, at the same time, China Exim and CDB did account for 79% of the aggregate loan commitments that were provided over the years. Some other financiers were ICBC, Bank of China, CCB. These are all commercial banks, as well as some government entities such as SIDCA, which was formerly MOFCOM, and then Chinese companies as well. When we look at the sector breakdown, we do see again that the transport and power sector has received the most aggregate amount of loans across the years, but ICT is growing while mining has fallen off since 2016. So, after seeing this low amount in 2020 and seeing this general decline, it does beg the question of, are Chinese loans to Africa drying up? And what we saw when we compared Chinese loans to Africa with World Bank lending, we did see that Chinese lending to Africa specifically tends to decline during times of crisis. We believe that this is generally because of commercial and some strategic interests that Chinese lenders tend to have. And then we also have seen decrease in Chinese policy bank loan commitments to other regions such as Latin America and the Caribbean in 2020. So, when you pair up the COVID-19 effects with some of these longer structural risks, it does lead to more of a conclusion that this could be a temporary drop that could be followed by maybe a difference in source types of financing for the region. So in 2020, we did see that loans decrease, but we also saw that foreign direct investment did decrease, similar to how similar to how foreign direct investment increased in 2008 during the 2008 financial crisis. So in the future, it may be that Chinese FDI may be an increasing source of financing for the continent. And then we also, there may be increasing financing to African regional banks for the purpose of on-lending to African borrowers as well. So that concludes that part of my presentation. And again, we just wanted to thank lead researcher and Global China Initiative pre-doctoral fellow Jijong Huang for leading a team of RAs on this research. And we specifically also wanted to thank Lucas Engel and Sobia Shadbar that helped co-author the policy brief. So I'll take a moment here to switch over to the data interactive and briefly just walk you through how to use the interactive. So when you come into the website, we're really excited again to release this because we think it can provide lots of insight into Chinese loan to Africa in a visual format. And so when you come into the website, you'll be able to see information about the database. And as you scroll down, the data and even the map behind changes for that visual representation of Chinese loans to Africa. You can click into explore the data and it'll give you just a quick tidbit on how to get started. So when you first look at the database, you'll be able to see the amounts, the full amounts of Chinese loans to Africa, as well as the number of loans. If you scroll down past the map, you'll also be able to see a bar graph of sectors that have received these loans, as well as the years in which these loans were signed specifically. If you scroll down further, you can click into each country to look and see each individual project that has received loans, the year the loan was signed, the Chinese lender, and then the allocation amount for each project. So one of the exciting aspects of this database is that you can do lots of very interesting analysis by clicking into the map itself. So just by hovering over the bar graph, you get the same breakdown of loans to certain sectors. And you can also click on the specific country itself, and the sector graph, the year graph will adjust for that specific country. Now, if you wanted to look at multiple countries at once, you can also do this. So let's say we wanted to look at Angola, Zambia, Ethiopia, South Africa, Nigeria, Ghana, and Egypt all at once. So everything down here, all the sectors adjust, as well as the year, as well as the drop-down list. If we wanted to look into these Chinese loans to these specific borrowers for a specific year, we can also click on the year, and again, all the graphs adjust and the map adjusts as well. You can also click on multiple years, which is really great. So I'll reset the years here and switch quickly over to the lender side. So you'll also be able to see a visual representation of Chinese lenders on this map. So if you go here and hover over this info, you'll be able to see that we've broken down lenders into lender types, and they're associated with different colors on this bar graph, as well as, again, you'll be able to see which lenders provided what amounts across the various years. I wanted to take a moment to, let's see here, look at the regional loans very quickly, because these regional loans, again, are for African regional banks. And if you hover over this info, you'll be able to see the different banks and their acronyms that the regional loans cover. If you click into each regional loan, you'll be able to see which bank received the loan commitment. Okay, so I hope this map is helpful and gives you quick insights into Chinese loans to Africa. If you want to download the data, you can click on this About and Data Download tab and fill out your information here, and we'll send the data to you. Feel free to take a look at our policy brief as well to understand the data in context, as well as the guidebook. And if you have any questions, feel free to reach out to me at odm@bu.edu. Thank you so much, and that concludes my presentation. I really appreciate your attention.
Thank you, Tarella, and thank you for showing our new interactive. I think the team, Tarella and the team, have put in a lot of work into designing that so that it's very usable by a wide audience. So we do hope that you go in and play around with the data. So now we'll hear some comments from our distinguished panelists who will help place what we've shared in the broader context of the China-Africa relationship. And we'll start with remarks from Yike Fu, the China-Africa policy analyst at Development Reimagined. Over to you, Yike.
Thank you, Cecilia. And hi, everyone. Good morning, good afternoon, and good evening, depends on your time zone. And it is my great pleasure to be here and provide remarks. And congratulations for Boston University for the launch of the new data platform. And personally, I use the database very often for our DR projects. And I also know there are a lot of experts being here today who has been doing China-Africa financing for so many years. So really feel very honored. So for me, we have identified 5 additional findings to those shared by Boston GDP Center colleagues. So the first one is there is a significant decrease in the number of projects agreed in 2020 compared to the other year. For example, in 2019, we saw there were 43 projects. And since 2015, the total number of the projects averaged around 60 per year. So although 2016 and 14 saw a spike in projects, but we did see a decrease in 2019 as well. So secondly, so contrary to some of the write-up, the average size of the loan has not changed much in 2020, only slightly down. So we calculate that on average, there is a 172 million for the average size of the loan. And in 2019, the figure was about 234 million. And in 2018, it was 178 million. So indeed, for each of the 11 countries, a comparison of the size of loan received from China between 2016 to 2020 has not shown any significant decrease or increase, apart from Madagascar, decreased by more than half of usual in 2020 compared to the data in 2019. So, and also DRC, which has decreased by more than half compared to the previous year. So the third finding is that from our perspective, one of the most interesting features of 2020 is the Afri-Exim Bank loan. So one of the few cross-regional projects we have seen agreed. So the loan was about 200 million in 2020. And we also checked that in 2019, like the loan to Afri-Exim banks was about 75 million. And in 2018, there were 2 separate loans to Afri-Exim bank. One is about 500 million and one is at 350 million. So we also see that in 2018, there was 300 million allocated to Africa Finance Corporation. So in comparison to 2019, the 2020 loan is much higher, but when looking at other years, the loan amount in 2020 is quite normal. So the fourth finding from our side is the loan in 2020 were not mainly to countries with low debt ceilings. In fact, all countries apart from Uganda were either classified as moderate or higher level of debt distress. Ghana received the most loans in 2020, which has 3 projects and was classified as a high level of debt distress and still is. So we say classified because we do not agree with the suggestion that classification necessarily means reality, and we have good reason for this. And so I think the last point I want to mention about in 2020 of 11 loans agreements, only one country, Ghana, was on the top of 10 Africa government recipients of Chinese loan between 2000 to 2020. I think you can just personally check the database about to rank the country. And we find it's very interesting that the country usually lends finance to, such as Angola, Ethiopia, did not manage to secure agreements in 2020. So what does this all mean? And for us as a consultancy, advising government and others on the future trends, the most important thing and the most important questions is to ask why. So why did the loans fall in 2020? And understanding why will help us to understand the future. So in fact, we put the why question on our social media, on Twitter. We asked, what do you think it is the most important reason that loans from China to Africa fell in 2020? So we got kind of pretty interesting response. So we have 47% of response saying that because it is COVID-19 China, and following like it is because Africa debt distress, which has 33% of response, and non-performing loans, which receive 13% response. So what does this mean for the future? So based on these findings and analysis, we are not as pessimistic as others to the future of Chinese financing in Africa, including concessional loans, partly because we are very positive about African growth prospects. While we do think it is logical for Chinese firms to explore more PPPs and FDI, and given full cap, we expect them to do so because they are building confidence. So the fact is, to grow, Africa countries need more infrastructure, and our view is that Africa countries need a stimulus to get over the current handles, more concessional loans in order to overcome barriers. Otherwise, they will be locked into a circle at debt servicing with no economic return. So to borrow a Chinese idiom, Africa countries must avoid 宁可掘井, which means digging the well while being thirsty. So this has happened far too often in the past, and more finance for productive means is the only way to dig the well. Even a bit of water now, such as debt relief, will not be sufficient. So indeed, if any development understands these challenges, I would say it is China. And that is why we are hopeful, but we are also know that it is Africa government that must have the confidence to make the case to China and other development partners. And thank you all. This is my kind of quick remarks, and thank you for your attention.
Thank you, Ika, for sharing those remarks. And it was great to learn more about your research. So next, I will turn it over to Dr. Piwo Munyandu, who is a lecturer in African Studies at Howard University. Over to you, Piwo.
Hi, thank you very much. I'm honored to be here, and congratulations to the work that you're doing. It's very nice to be invited to an institution that has kind of an institutional background on Africa and serious African research and investment in it. My background is basically development. So I research developmental results, the developmental outcomes, the other side of these loans. especially with regards to African students, African education, and some initiatives that are linked to development. I can say right off the bat that there's a background, if I may just zoom out from the data a bit, there's a background to this. In 2020, of all the FDI in the world, Africa, only 4% of it went to the African continent. And of that, 1% was in Northern Africa. And of the other one was 0.3% was to South Africa. And so 2.7% really, these African countries that we're talking about in sub-Saharan Africa have kind of been in a morass as far as foreign direct investment. So that's kind of the background of some of these loans. And I could see that in the nature of the data, and I look forward to actually us having a bigger discussion on that later. But I just wanted to put that background right there. First, I would say my conclusions border on kind of the South Africa. Kind of like South Africa seems to be the future or the destination for some of these lending patterns, because South Africa's unique economy. If you look at when I looked at your data, there's kind of a more diversity of lenders, because you make a distinction between these policy banks and the commercial banks. Well, in South Africa, the picture kind of looks more diverse. Whereas if I look at, even in the neighborhood, if you look at Angola, if you look at Zimbabwe, there was more lending from policy banks than there was from commercial banks. So in South Africa, because of its nature, it's quite a capitalized economy, and it's very, very linked to the global economy itself, as we've seen with many Chinese banks moving their branches to South Africa. And as such, then this diversity was manifest there. I will make an example to why I say then the future of this lending and what we're talking about, the data we're talking about, is is trending towards South Africa. In 2013, there was a deal that was made between a company called Sekunjalo, which is a media company. Sekunjalo basically came up with 150 million, and what they call the Public Investment Corporation of South Africa, PIC, came up with 850 million. But from the Chinese side, there was 1 billion loan. And what we may look at here, as far as how it relates to our data, is that this was not a policy bank. Nor was it a corporation, actually a commercial bank, but it was a public investment corporation. Also know, and this corporation is registered in Mauritius. This corporation also has interest in what we call the Chinese Consortium Investment Corporation Holdings. Why this is important is that this loan, basically, the result of it was that South Africa, the independence media of South Africa, which is the biggest media group, private media group in Southern Africa, we basically got to have Chinese interest. So what you're seeing then is that with this diversity, as it starts to spread in the region, we'll see more African countries in Southern Africa kind of follow the South African example by less policy banks and more private-public partnership. And that's what I'll kind of confine my remarks to this morning. I look forward to us having a bigger discussion.
Thank you, Piwo, for bringing in that broader background and sharing some more about some specific diverse cases, diverse in terms of the institutions getting involved, and for sharing sort of the comparative perspective on South Africa. And lastly, I'll invite Dr. Magali Masamba to provide remarks. Magali is, as I mentioned, a joint postdoctoral fellow with the Global China Fellows Program here at the GDP Center, as well as a postdoctoral fellow with the International Development Law Unit in the Center for Human Rights at University of Pretoria. Over to you, Magali.
Thank you so much for the opportunity to share my thoughts, and congratulations on this database. I played around with it myself. I found it user-friendly and very interactive. So I enjoyed making use of it. My background is more in law. I mostly research issues on sovereign debt restructuring and I guess the quest for an effective, broad-based global framework for restructuring. So I think in the context of that focus area as we are exploring solutions to the big issue of Africa's unsustainable debt. I think two main questions have been hanging over our heads, which is what do we do about Chinese lending? How do we restructure that? And also privately held debt. So I think that this policy brief and the database comes at such an important time when African policymakers and academics and so forth are showing greater interest in Chinese lending. But also there have been many, questions and controversies on certain aspects of Chinese lending, like the controversies with Entebbe Airport in Uganda, which is also, I guess, creating more attention to Chinese lending from the perspective of community members, citizens, and even civil society organizations. So I think this database is fantastic in my view because it not only paints a picture or a lay of the land, but I felt that the policy brief highlighted some of the big substantive questions, especially when it addressed why has there been changes in Chinese lending. And one thing I appreciated about the approach in addressing the why was firstly the focus on, or at least acknowledgement of both the external and internal factors that have impacted the trends, but also secondly looking at are these trends impacted by short-term crises, or is it really a long-term Chinese policy approach that has impacted lending? So in exploring these issues, I think the approach, at least a substantive approach, was very interesting because of the emphasis on Africa's rising debt and of course the economic fallouts from the COVID-19 pandemic. But one question I would have for the analysts is whether the Ukraine-Russia conflict, which is definitely impacting African economies. I mean, we've personally seen rises in foodstuffs, fuel, and definitely there is an impact, whether that as well is among one of these short-term crises that is impacting or could potentially impact the Chinese lending to Africa. So if I could comment a little bit on the why have there been changes? The report mentioned, external factors such as Chinese lenders displaying more caution since 2016, which in my view is quite interesting, especially when we consider that about 2016, there was a lot of focus on Africa's unsustainable debt. So if we look at before 2016, for instance, in 2013, the World Bank had already noted, or at least was cautioning that 8 African countries were already at a high risk of debt distress. In 2014, the IMF managing director had started to raise concerns about the mounting debt levels. And this was mainly from the proliferation of Eurobonds as investors were searching for yields. But in 2016, UNCTAD also cautioned African countries about their unsustainable debt. So I guess the aspect of the report that I found most interesting, and partly because of my area of research and focus, is really about the impact of overborrowing and the potential fears of default that Chinese lenders may have, and I look forward to discussing this further during, hopefully during the Q&A session. Thank you very much.
Thank you, Magali, and thank you to all of our panelists. We'll move now into a discussion. So folks in the audience, please type your questions into the Q&A box that you should see at the bottom of the window. And it would be great if you can also include your name and affiliation, just so we can all get to know each other. And while you're doing that, I'll take the moderator's privilege to get us started with a few questions. And I think Magali, you raised this idea of some short-term crises versus long-term crises determining the course of Chinese lending to Africa in the past couple of years, but going back even further, there have been some clear trends with the total lending amount of Chinese loans to Africa peaking in 2016. However, if you take out the special case of Angola, this peak was even earlier, I think in 2013, if you're looking at our data. So I think the panelists have covered some of the factors, and Tarela also mentioned in her presentation some of the factors driving a sort of more near-term decrease, the pandemic, debt levels in African countries, and so on. I wanted to ask, Magali, are there any additional factors that you think we missed or that should be expanded on? And similarly, Tarela, if you had any sort of longer term perspectives on this trend, other panelists definitely also welcome to jump in.
Okay, I think maybe I'll give it a shot first. So when I look at the reasons why there have been trends, the report kind of mentioned four, at least in my understanding, four. The external factors such as more cautious approach towards lending, a reorientation of China's own investment towards increased internal demand. And when it comes to the external factors, there was indeed the discussion of the willingness of African borrowers to borrow, which seems to be declining because of crises, and of course the issue of over borrowing and fear of default. I found that discussion to be very accurate and demonstrative of the landscape, especially when we look at the internal factors, the African landscape. I guess that's the aspect I can comment on most. I do feel that that aspect required a little bit more focus when it comes to maybe in a more direct manner linking concerns over Africa's debt landscape with changes in how China has been lending. I don't really work with statistics myself, but it's quite a coincidence that when African countries are becoming over-indebted and there are concerns that they will revert back to pre-HIPC levels, then you find a reduction in lending from China. And I guess one can deduce that there's a logical connection between the two. So I do feel that that aspect of the debt landscape, while it was discussed, could be discussed in more detail, and is definitely an issue that requires more focus. Because the question is, will China throw money into a continent in distress? Thank you.
Yeah, just kind of to piggyback on that, I think what Magali shared kind of begs the question about also Chinese perceptions of debt distress on the continent. So I think Ika brought up an important point about, there are perceptions of debt based on how debt levels are calculated. And we at the DDP Center have often advocated for including public assets in that calculation of kind of liabilities versus, in the calculation of liabilities for African governments specifically. So I think perception here is kind of a question that we will continue to see in the future, but it does not change the fact that Chinese regulators have kind of been putting out recommendations and regulations on Chinese lenders to focus more on sustainable lending, as well as it seems that those regulations are linked to also this kind of change in the direction of where the Belt and Road Initiative is going. And so, with addition to COVID-19 and kind of this change in the BRI that we may be seeing, I think in the next few years, it will be interesting to see what factors really were the cause of this decline in lending, and if those factors will continue to impact lending in the future.
Great. And then in the near term, as we mentioned, borrowing capacities in some countries have been severely reduced. There are ongoing effects rippling out from the war in Ukraine. So given these constraints, I wanted to ask, are there new opportunities for China and African countries to work together on debt relief? I think this is a really important question going forward. So we've talked a little bit about the past, what could happen in the future. Would love to hear from Yike as well as other panelists. Welcome to jump in.
Yeah, I think maybe I can add a little bit more for the question 1. And I think I forgot to mention about our thinking related to like we after seeing some Twitter response on like the survey. I think from our based up point of view, we think, and also speaking to several Chinese and African stakeholders. So our views is that COVID-19 in China is kind of the predominant reason for the fall. And also like, that is quite important because because of COVID-19, there's less visit back and forth like from Chinese visit leaders to Africa. So now in 2020 and in 2021. So it's so difficult to sign agreements, and it's quite difficult to know counterfactual if COVID-19 has not happened, especially given the FOCAP like AIDS commitments. And I believe so we still need to wait some time to see like Chinese lending, whether will maybe change significantly in the future. Yeah, I think that's my adding point. So related to the question 2, I think so talking about the debt relief, we need to look at the data objectively. So while we have heard a lot about the debt crisis, and I think there are 2-3 caveats to this analysis. So first, Africa is not a country. So it's like all Africa country has very different situation. So DR has previous calculation that in absolute term, 48% of all debt is owned just by 16 countries. So in fact, most Africa countries have external debt ratios equivalent to less than 50% to their GDPs. So only 6 Africa countries have external debt ratios above their size of their own economics in 2020, which are Angola, Cape Verde, Mauritius, Mozambique, Tunisia, and Zambia. So, and overall, like the Africa continent, the debt level are back at early 1980s level of debt, so well before the widespread debt crisis. So we had like the Africa continent has the opportunity to avoid the mistakes of the past. So second, and I think I kind of touched a little bit in my remarks about most Africa countries are at the situation of too little debt to stimulate economic growth and provide jobs for people, and paying too much of their existing debt, like interest rates are very high, so repayments are super high, especially due to COVID. So like we have a lot of spending on health. So I think Africa countries need more cheap debt, not less debt. We have to, but we like more importantly, I think we have to question whether the debt sustainability criteria like being applied, like 60% threshold and so on, are appropriate for Africa country situation. So I think that my last point is about China has provided debt relief to Africa countries in the past. So in some cases, more than bilateral lender. So even when China was much smaller as a lender than the other Paris club lender, so China didn't need to be in a creditor meeting to do so. But there can be definitely be more progress between Africa countries and China. And for example, even cheaper loans that use labor and contents, loans for regional projects and not just national projects. And also like the quality of the loans also matters. And joining the Paris Club, like China joining the Paris Club cannot do this. So, but perhaps some sort of African borrowers community could also help with debt relief and improvements. So like have like the bilateral negotiation, etc. Yeah, I think that's my kind of response for this.
Great, thank you, Ika. And we've talked now a lot about the drivers of these overall dynamics in China-Africa lending, but one thing we haven't talked about is how the composition of Chinese loans to Africa might change. So we've seen recently some Green Belt and Road Initiative guidance coming from China's ministries. There's also been some discussion at the 2021 Forum on China-Africa Cooperation, the FOCAC Summit. How might Chinese financing to Africa change in the future in terms of where it's going? Piwo had mentioned a specific project that was for a media company, and Tarella's data also showed that the ICT sector jumped up to the second largest destination sector in 2020 compared to previous years. So I'd love to hear from Piwo or from Tarella, what are some potential new areas of development growth on the African continent that could attract financing in the future?
I think to start with, if I may just chime in on the idea, some of the factors may be another factor that may be responsible for a reduction, which while marked, it's not as significant for some of these countries in Southern Africa. Maybe the founding in 2019 of the U.S. International Development Corporation, which is actually, some may say it modeled after some corporations from China, a similar corporation, but also from the EU. But in South Africa, Zimbabwe, Namibia, Botswana, I would say there's been this talk about building kind of a fast train system. In other words, a rail system from Durban to Johannesburg to Harare to Gaborone. So that might be one for us, especially if it begins in South Africa. We've already had reports especially I think last month, about talks being ongoing within South Africa itself. But I think it shows also a bigger picture is that it shows the importance of such data that you guys have, because you are able to have conversations about accountability, where right now it's big political fodder to talk about these grand projects, and then we take them seriously, but then the elections pass, and then we don't hear about them anymore. So it's good to be able to come back and see this data. So that's one, infrastructure, especially a rail network, starting in Durban to Johannesburg.
That's very interesting. I would like to focus my comments a little bit more on the sources and types aspect of the question. So we saw that from the FOCAC Dakar Action Plan, there was some indication as to which Chinese lenders in the future may be more involved in kind of financing generally, not just lending to African countries. So we did see mention of more concessional loans in the past. Policy bank loans and even commercial loans tend to be a little bit more commercial in nature as compared to loans from some of the other multilateral development banks. So China did mention providing more concessional loans. They also mentioned some of their China established multilateral development banks, such as the New Development Bank and the Asian Infrastructure Investment Bank as well. And so some financing in the future could be coming from those banks. There was also mention of trade financing, specifically to support African exports to China. So that indicates a little bit of a shift to maybe address the Africa-China trade deficit generally. And again, there was a lot of discussion about cooperation, regional cooperation between Chinese lenders and African regional institutions across the continent. And there's lots of opportunity for that. So again, we may see more of that financing going to regional projects in the future. And we also may see financing going to the renewable energy sector, specific to kind of this new guidance that came out from the NDRC for Chinese lenders. So this could look like in the form of foreign direct investment from Chinese companies that are seeking to invest in greenfield, new renewable energy projects, which could, in a sense, replace a lot of the financing that has gone to energy sectors that haven't been quite green. So I think it's an exciting time to be looking at this data and to see what changes could come that could be really valuable for African economic growth.
Thank you. And I'll now turn to the many excellent questions that we're getting from the audience. So keep them coming. I'll group the questions together and then see what the panelists would like to take. And I'm seeing a few questions about the lender perspective, so coming from the Chinese side. First, do loans from commercial banks and versus companies have different characteristics than the development bank finance coming, for example, from China Development Bank, such as the amount or the conditions of borrowing? Somebody else has also asked, the data shows no loans, presumably in 2020 from the China Development Bank. Are there any specific issues associated with China Development Bank's reduction? And then also, what are the key reasons that China wants to lend a huge amount of money to Africa in the first place? And so that, getting back to that motivation can help us understand recent variations or changes, so bigger picture. So I'll start with those questions.
I can maybe kick us off with some of the questions, the first two maybe. So for commercial bank loans, we do tend to see that in terms of their size, they tend to be a lot smaller in their aggregate amounts when we compare them to the policy bank loans. And that may just be inherently because policy banks tend to take on larger infrastructure projects. And then we do see that for commercial banks, there is oftentimes a condition of using Sino-Shore support. So Sino-Shore is China's, it's another export credit agency that specifically provides insurance and investment. And that Sino-Shore support is often there to kind of support the Chinese lender should any risks related to financial, political aspects of the projects arise. So those are some of maybe conditions we see for the commercial bank loans. And then for CDB loans, CDB loans, generally when you look at terms and conditions, but also by Chinese lenders have been categorized as more commercial. And if we're thinking about, debt distress for some countries and potentially the effect of the IMF kind of encouraging countries to take on less commercial type loans and look more for concessional loans to address issues during that time, it could be that CDB was not particularly an option for some African borrowers in 2020.
Any other takers, or shall we move to the next round of questions?
I think I can take for the why China sending so huge amount of loans at the very beginning. So for me, especially I'm a Chinese, so I can share my personal experience and personal perspective for this. So I think the first point is about China as a developing country. So it kind of feel closely with Africa countries. So to want to help Africa growth and to develop their economics. So the second thing is, I think China wants to apply its own experience to their African friends. So in China, we have heard a lot of times about a saying if you want to reach, just build the road first. So I think at the very beginning, we can see a lot of Chinese financing to African countries, particularly in infrastructure sectors, like the transportation, roads, etc. So I think that's kind of very fundamental thing, because if you have the roads, have the railway, have the airport, the all trade related infrastructure, that will can connect rural area with the urban area. So that's kind of one very important thing to like regional connectivity or even like national connectivities. So I think that's a reason why like China have so many like huge amount of loans at the very beginning. And I think personally, I really want to share some feelings about and our DR colleagues, like they attending the FOCAC 8 at Dakar. Oh, I think, Senegal, Dakar, yes. And I think so based on the FOCAC, so we expect that, and so more regional projects rather than just bilateral national ones will be given in the future. And also like DR host a special dialogue with AU Beijing office and to talk about the PIDA projects. And we heard in the discussion that there will be more green energy and green transportation like projects in the future. So I think that is kind of like China explore their ways to explore its ways on helping Africa countries. So maybe, but I think, so for me as a Chinese, so I strongly believe that, so like investing or financing infrastructure project is still kind of very important now and even in the future, like in the continent.
Thank you, Ika. And I also am seeing a couple of really interesting questions getting back to the debt question and how it's been interpreted. First, Samuel Shi from Colombia has asked, to what extent does the database help tell us more about the issue of hidden debt that aid data has discovered? Another question is around, does the database allow us to see how important in percentage Chinese loans are in terms of total national debt of the leading debtors? For example, do Chinese loans represent more than 50% of Angolan debt? I would also, I would mention that we have developed a debt for nature and debt for climate swaps interactive at the GDP Center that does visualize and track the percent of Chinese held debt and total debt from some of these countries. So I would encourage you to also check that out for some of that data. And then lastly, Nick Lowe from the Rockefeller Brothers Fund China program has asked, we hear a lot of very politicized narratives around lending to debt-distressed economies in Western media, government discourse. What kind of information or perspectives are missing from these discussions? And who would you like to hear more from in the public sphere on these issues? I think that's a really excellent question. Yeah, so we'd love to hear from you all.
Maybe I can jump in first on the database itself in relation to debt. So just wanted to note that our database focuses on loan commitments that were signed. It's not an indication of debt levels. We don't track disbursements or repayment. So I just want to provide that just as a distinguishing factor between the data you see on our data interactive and some of the debt data you may see from other sources. In terms of relation to hidden debt specifically, so our data, we specifically had a methodology that is dependent on the World Bank IDS kind of requirements for reporting debt, where we look at not just debt that was given to the borrower as the sovereign or loan commitments committed as to the sovereign, but we also look at any project that has more than 50% stake for the sovereign borrower in the project. When it comes to projects that are more joint ventures or special or that have a special purpose vehicle. So with that being said, we don't look at commitments that may have a government sovereign guarantee to it. We look at commitments that were solely made to the sovereign borrower, or if it was some sort of public-private partnership, the government again had a 50% stake. So I hope that helps answer those debt questions there a little bit.
I would say, if I may add, I think what do people miss? The question was asked. I think they kind of miss the African aspiration in all of this because when we're talking about the numbers and debts and the ratios, we kind of miss the road between Lubumbashi and Kinshasa that is muddy and relies on rain, whether it's passable or not. And so the African aspiration in Congo is that they would like a paved road, and this to be similar to an interstate in America. And the Chinese loans are able to provide this. In a world where there's kind of an investor strike on Africa, as many African policymakers have actually made it known since the 1990s and in 2000. China has basically found a market that is there, that is actually where it's actually green and it's able to exploit. Now, I also like to hasten to add that these loans are not the motivations. Of course, there is a strategic motivation to this. In a time where President Xi Jinping believes in the China dream, that China must stand up, that China must no longer walk with its head down in the world. There is an impetus in Africa to kind of show that China has stood up, that the China that bides its time, hides its capacity, and never shows leadership, are kind of, those days maybe are gone. And some of these, whether it's loans and private public initiatives, are not divorced from this strategic reality, I would say. So motivations and then the African aspiration.
If I could just add in 2 seconds, one other issue that I think is probably missing in the debate, which is really about the contractual provisions themselves. I think a lot of the politicization of the topic is because there's a perception of secrecy and issues on transparency. I do know that in 2021, there was a very interesting report. I think it's How China Lends, a rare look into 100 debt contracts with foreign governments. So studies like that will also help create a better understanding on how China lends and create a better narrative. Thank you.
Thank you. And I just want to ask one last question, which I think is also a nice concluding question. It would be great if each panelist could just briefly speak to this. Are there lessons to be learned for the Build Back Better World initiative and the Global Gateway project from the EU? How do we ensure that these funding projects actually help Africa in the long run? What are lessons learned? And also, what do you think that the emergence of these initiatives could mean, how they might impact China's lending behavior and the landscape in Africa? So let's hear from each of you as our last question. Thank you. Perhaps I should call, let's go in order that we started with. So Tarela, Ika, and then Piwo and Magali. Thank you.
I think the main lesson is that African countries, I think, are willing to work with any partner that is willing to partner with them for economic growth. So with that being said, China has, invested a lot of their resources for that partnership. And I think in the future, a lot of African countries would be willing to work with those from the Build Back Better World initiative and the EU Global Gateway. It's just that I think it's very important to realize that it is a partnership. It is joining together with countries in order to together with them address some of the economic needs and the infrastructure needs that are within their own countries.
Yeah, I think I kind of have similar views, Tara. And I also kind of write this, my perspective on China-Africa projects. So for me, as a development practitioner, so to help Africa countries to grow and meet the SDG is to not let African side to choose which side or which countries to cooperate. So, and I think China has provided lots of support and financing over the past year that other development partners which might ignore or hesitate to do that. So right now, I think it's kind of good that China has Belt and Road, US have B3W, and EU have its infrastructure plan to help Africa develop. So I think that would be wonderful. So I think maybe ideally, or maybe more like opening minded that. So if these three kind of initiative can be designed closely or carefully to together promote the Africa continent to development through FDI, through more like in more much needed infrastructures.
Thank you. I think for me, projects like this one, actually, we should have more partnerships, especially with, as you already do have in the continent and in China, and as well as to have a comparative look at other loan sources and compare them with those from China. But also, I would say for this initiative and looking at African development, the African countries kind of, they do know what they want. And often case, and the African people know what they want. For us, then it's for the Chinese to be able to facilitate this. They're not helpers. There are no helpers. They are facilitators. No one is doing anyone favors. And I think, lastly, I'd say, we always talk about, from the Western side, we talk about shared values. There's always shared values, US, Africa, shared values. But also, I think we're moving towards a time, or we should, where development is a shared value. And I think this will enable us to kind of move past this binary of kind of Western narrative, shared values, China, practical, money, roads, and be able to actually initiate more developmentally minded programs and initiatives, joint initiatives between the US and China on these shared values of development.
If I could share my thoughts, I do believe that the fact that Africa has a major infrastructure deficit is no secret. The fact that Africa has got a major financing gap is no secret. And the fact that there's a decline in Chinese financing is a major concern, at least from the African perspective. The question is, how do we fill that deficit, whether it's going to be additional lending from China in the future, when there isn't a crisis. But really, when we fill this gap, I think we're going to be thinking not only on the quantity of financing that we need, but also the quality. And especially with respect to the quality, of course, is the issues of sustainability, transparency, and accountability. But beyond that, I think an important part of the narrative that can't be lost is the fact that Africa needs partners. I think one of the speakers mentioned the issue of partnership, but also autonomy in setting its development agenda. So I think that's going to determine what kind of partners that the continent engages with.
Great, thank you. Just a huge thank you to all of our panelists today and to Tarala for sharing the database, to the team that's been working on all of this data work. I want to invite everyone to connect with us for our newsletter. The link is in the chat. We didn't get to all of the questions, but we hope that you'll get in touch. You can also connect with us on Twitter at GDP_center and explore the interactive. We'll have one more Global China Research Colloquium this semester, so next month, May 18th at 9 a.m. Eastern Time, on looking at the marine risks associated with China's overseas development finance. So tune in for that, get connected with us. Thank you to everybody who came today. Thank you for your great questions. And we look forward to getting in touch with you. Thank you. Bye.